Okay, let's get started. So on the right here, I have what we're going to go over on every single chart. So I put this box down and we're going to go through systematically how I break down all of the charts. So on the ES, what I'm going to do is I'm going to quickly break down the chart, and then I'm going to show you some trades that you could have taken from last week. And I'll go on the lower time frame, and I will examine trades you could have taken here, here, and a couple other trades as well. So the first topic that I wanted to cover today, I've covered the trends in some of my past videos, but I wanted to dive more into depth on key reference areas. So you may also see this abbreviated if people are typing in the Discord, just KRAs, uh, key reference areas. So this is what we're talking about with key reference areas. Buying and selling tails. So a good example of a buying and selling tail, the best example here is this here. It's basically a wick where you see directional conviction and direction change. So this is big wick to the upside. Buyers are stepping in really rapidly here, and price change direction. So this would be a key reference area. So this would be a zone that you could draw like this. So the idea is if price ever comes down into this buying wick, you could see a reaction away from it. And then it works for selling wicks as well. So it says tails here, but it looks like a tail because it's a big wick, basically. Up here, you have a small selling tail, but it's nothing major. Typically, I'd want to see a bit longer of a wick. If it had like a selling tail like this, then that would be an even stronger key reference area. And then the next one is extremes of balances. So on this ES, I wanted to highlight a couple of the balances that we've had recently. So this would be one of the more major balance areas. This is a small one. And then we have a small one here and another small one here. And then these two here and here, if you put them together, it's one bigger balance area as well. But the balance area, low area, is right here. So we're looking at extremes of balances. So the extremes would be the top and the bottom of the balance areas. So I drew out all of the balance areas, but let me draw out the zones. So this would be the top extreme of the major balance area, and this would be the bottom of this larger balance area. And then you could have one here in the middle. This would be the low of this balance area, and it's also the high of this smaller balance area together. And then you could have another extreme right here, something like this, because this is the top extreme of this balance area. But higher time frame speaking, if this is your bigger balance area, the more important balance area or the more important level will be the top extreme and the bottom extreme. And then over here on the left, we have this balance. So we'll have a zone at the bottom of this as well, like this. Let me just get rid of these. And then high volume nodes. So HVNs, high volume nodes. I've gone over this in the past as well. And again, it has to do with balance areas. So if we look at this balance area here, you can use the fixed range volume profile indicator if you want. Oh, wrong button. Fixed range volume profile, and draw it over the balance area, and it will give you the high volume node. Typically, the high volume node is in the middle of the balances. That's where the most volume occurs inside of a balance, is right in the middle. So you could have a zone right here. And then again, if we're looking at this as the balance and then the two smaller ones, you could have high volume nodes for each of those as well. And one thing to know about high volume nodes is oftentimes you get directional movement after testing the high volume node. So you'll see that explosive move away after testing that area. So if we look over here on the left, we have this range forming. Price comes up, it tests the high volume node area, and then it takes off, breaks outside of the range. And then it pulls back to the top of this balance area, and then it takes off again. Okay, so then we look at directional conviction. So areas where we have directional conviction. So if we look on the left, this area has directional conviction. So this is a key reference area for two reasons. It's the low of this balance area, and it has directional conviction. And if we actually zoom in a little bit, it also has a smaller buying tail as well. So I would characterize this as a very strong level. So I could maybe change the border, make it bright green to let me know, okay, this is a very strong area. And then again, where did strong directional conviction step into the downside? Right here, strong directional conviction. So red level, red border, strong level of resistance. And then we also have a smaller selling tail here as well. And it's the top of this balance area. So multiple reasons why this is a key reference area for the future. And then bull bear zones. This is the last key reference area that I'm looking for. So what a bull bear area is practically this level right here. So if we look at this level, a bull bear area is where when price comes into the level, the sellers push price away. And once we break the level to the other side and the sellers bring price back down into the level, the buyers step back in. So the bulls and the bears are both stepping in once price breaks the level. So as we can see here, seller stepped in, we broke the level, buyer stepped in, buyer stepped in, buyer stepped in again, we break the level, comes back to it, seller step in. So this is a bull bear zone. And again, this has confluence on multiple of the key reference areas that we're looking for, because it's not only a bull bear zone, but we have a buying wick, and also it's the balance area low, which more recently, that's to me one of the most important things about this zone is if we broke below this balance area low, I want to see if we hold the breakout and we sustain below this balance area. So for me, again, since we're below this area, this would be a very strong resistance level. Let me just change this one to a white level. This one will also be a very strong level. This is the all-time high. Again, all-time high could also be technically a key reference area, but the all-time high oftentimes won't hold as well as some of the other key reference areas. If price reaches all the way up to the all-time high, usually the buyers are strong enough to break above and continue. So I would say if we break above this area, we could see price continuations. So this was a nice long trade that you could have taken. It was in the overnight session. Unfortunately, it was the last hour of one of the sessions, and then in the overnight session where the reaction came up from here. But this was a major area. And I'm going to keep looking at this level of support to see, can we maybe do a double bottom to continue long, or are we going to break the level, pull back into it, and then continue to the short side? So this will tell us a lot about the context of the chart. So going back to the beginning here, if we're looking at higher time frame, last 1 to 3 months, the trend is going to be up we're going to be in a strong uptrend still on the higher time frame. But if we look at the last 1 to 2 weeks, let me go back 14 days. So it's around here. We will be bearish. So we're currently weaker. If you look at the highs are getting lower. If we look at the lows are getting lower. So I would say we are more bearish on the intermediate time frame. And then if we look at the past 1 to 4 days, which is the lower time frame trend. So let me find that. 4 days is right here. We're going to be bearish again. But we have to keep in mind that this level is a higher time frame level of support. So the higher time frame is always going to be the strongest levels that we could have. So, and the strongest and most amount of orders are going to be at the higher time frame levels. So if I zoom out and I draw up my Fibonacci lines from bottom to top, I can see that this pullback here is only a 38% pullback of this original move long. So what that's telling me is the buyers might still step in and be in control from here and be able to change the intermediate time frame trend back into a bullish trend. So you should only really start worrying about the potential bullish nature of the higher time frame if we are breaking below this 61.8% area. Okay, so based on some of these levels that I have here, these are the major zones that I have drawn. And I'll flip over to, this was some of the levels that I had drawn up on Friday. If you go into the Discord and the trade chat, I posted some of my levels. I usually post 3 resistance areas and 3 support areas before the trading begins. Again, this is on the ES. And I had a question about how I drew up all of the levels. So if I go onto the 1 hour, you'll see that a lot of the levels are exactly the same as what we spoke about. So again, key reference area here because it's the balance area low, and then key reference area here, it's the balance area low, directional conviction from this area, and buying tail. So let me go on to the lower time frame. So in order to find these other levels in between, you have to go onto the lower time frame. So this is a major level, this is a major level. And I showed you why already, but all of these ones are more minor areas in between. So typically I love to trade from the major levels of support and resistance because they'll have the biggest impact and the highest probability of working out. But you can also trade either for targets at the smaller levels, or you can look for some smaller scalping opportunities if you miss the ideal location. So this is more support and resistance on the lower time frame. So I'll start with this lower area here. So for this lower zone, this one thing that I was looking at is we had this range that formed. This is the high volume node in the middle, but it's also support and resistance. So this was a support area, and then there's some resistance in the past and resistance here. The open is over here, by the way, for Friday. So I was drawing my zones based on everything to the left of this line. I was looking at this more of a high volume node area where we could get a small reaction, but this is still the strongest level. This is another small range that we had form during the previous day. This is the balance area low and also support and resistance. So we had lower time frame buying tail. We had support here, resistance, and then support and balance area low. So that's why that level was drawn. And then this area is balance area high and also support and resistance. Let me zoom in a little bit. So resistance and balance area high. This is resistance and this is support. So technically what you could do is you could draw in 2 minor levels. So you could draw in a level like this, and then you could draw in another level like this. But for me, the levels are close enough, and also you have a drop, base, drop, where we saw the move continue here, that I just combined into one level. And then here is support and resistance, another minor level. And then this one was the major zone that I had drawn from before. So this was major resistance. So oftentimes I use these more minor levels as target areas where I'm just going to get out or scale out of some of my position. And then my more major areas, that's where I'm trading from. So long from strong support, short from strong resistance. Okay, so I want to go over this day here. I think this was Thursday. Yep. Okay, so this would have been a green level on Thursday. Just going to replay some of it. So I'm taking the data out from the right. Okay, so this would have been the support area on Thursday that we're looking at trading. This is the balance area low. And then how long was this balance? If we go back, this balance was 21 days. So 3 weeks or 4 weeks, 4 trading weeks long. So it's a really important level. The longer that the balance extremes hold, the more important the levels become. So this had been holding for a long time. So could we, on another day, could we have come down and then just gone long from here and maintained this balance? Yes, we could have. Especially since the higher time frame was long, we definitely could have done that. Now, on this day, we didn't end up doing that, and we broke down below. But your mindset has to shift. So when a key reference area is broken, your mindset has to begin to shift. So if this level gets broken, it's telling us information. I can go long here, but then you have to be willing to flip and go in the opposite direction. So, and the reason for that is stop losses. So a lot of different people on all different time frames in the banks, everyone knows what these key reference areas are. So if I am going long here, for example, so price comes down, makes this balance area low, price comes up, I go long here. Where's my stop loss going to go? Higher time frame traders are going to put their stop loss below this wick. Okay, if you get in long here, stop loss goes here, long here, stop loss here. When price comes here, stop loss here. When price comes down to here, stop loss still goes here. So when we finally break below this low, we see liquidation because everybody's stop losses are getting hit, and we could see a flush in the market. So if I go onto the lower time frame, so I'm just going to go onto the 2-minute. Okay, so this was the overnight session right here, touching the level, testing it, pushing away. It's not wrong to be going long when price retests it once the market opens. So market open is actually right here. And we see price flush down into this level. Now, this could have flushed down and then reversed. I've seen that happen plenty of times. Sometimes they like to show that there's momentum to the downside early with these big candles, but it's not true momentum. And it's basically almost a fake out. And we see price just go long. So going long here is a good trade, even though you might not be able to scale and you might get stopped out. That's fine. But once price breaks below, you can see the momentum gaining. And you have to look at the market internals as well. But on this day, they were negative and holding below zero on the tick and the AD line. Then we have to either take a breakout. Oh, you can take a breakout trade right here with a volatility stop. So your stop would be something like this or above here. Or you can take it on the pullback. So you can enter on this wick here using Fibonacci. if you draw it up like this, so this is the directional move from here to here. We pull back and your stop goes above the 61.8% here, or you could put it above the level if you want it to be safer. And then it continued short. And even if you weren't able to engage in a short, you definitely should not be trying to go long against this, because once we break a key reference area, most of the time it's either going to be a fake out where we break the key reference area and quickly turn around, or you have the momentum to be a trending day. So if you cannot join the momentum on the short side, just avoid the long trades. So there's multiple smaller levels in between. Just do not take them and just skip trading them. So you can look to enter on more of the pullbacks or just avoid trading completely. But these key reference areas, the whole point I'm making is they should shape your mindset about who is in control of the chart currently. Are the buyers or the sellers more in control? Let me flick back over to this chart. So they just give you a good understanding of who's in control, what time frames in control. So once we broke below this balance area low, I know that the intermediate and lower time frame sellers are in control, but are the higher time frame buyers going to step back in and regain control? For me, the higher time frame buyers do not fully step back in and regain control until they can get price back above this key reference area. This is a bull bear zone. Can we go and break above this, pull back, and continue back inside of the previous balance area? So we would need to flip the intermediate and lower time frame trends back into bullish. So if I was looking at some scenarios for this ES, I would be looking at, without drawing in any of the more minor support and resistance, I would be looking at potential longs from here based on momentum. What are the other markets doing? Are the other markets breaking down below their important support? So long from here, I'd be looking to break this level, pull back, and give a continuation down into the next important area, which, quickly looking at this chart, what do we have here? Another balance area. So we're going to have two important levels or three important levels in the balance area, but this is already the balance area high. We're going to have the high volume node right here and the balance area low right here. So for me, oftentimes the most important level in these balance areas is the area that has the most confluence, which, if we're looking at support levels, that'll oftentimes be the balance area low, because that's where the directional conviction is. This is the start of this up move. So that's going to be a level. Then we're also going to have a level here. But this would be the major area. So could we see price come back up and reject again? Or could we see price come back up, break above, pull back into bull bear, and continue back long? These would be the major ideas that I would have. But one thing to note would be how large this move is. So let me just measure it out. That's 150 points. The ES average is about 47 points. That's around the 10-day ATR. It might be a little more extended based on Friday's move, but it's around 47 points per session. So 150 points is 3 days move, and that's 3 days move extended in almost a straight line with no pullback or consolidation. Here's the pullback. So can we be directional again and keep breaking? Potentially we could. Or what we could see is some type of range form like this in between these two major areas before the market participants decide what direction do we want to move price. Okay. So that would be the major ideas here on the ES. Do you guys have any more questions on the ES chart? Nope. All good. Okay. Let's move on to the NQ. Let me just move this away. Alrighty. We can delete some of these levels and just start fresh on this chart. Okay, so let's start from the beginning. Higher time frame. Let me get rid of these two. So if we are looking at the past 1 to 3 months, let's just go back. Okay, that's pretty far. 90 days is all the way down here. So I would say we're bullish still, maybe neutral bullish. 90 days goes back like all the way over here. But we can see that the highs are getting higher and also the lows are getting higher as well. So higher time frame, let me just put bullish and then maybe slightly neutral bullish. It's not super strong up, but it is up. And then if we're looking at the intermediate, past couple of weeks, let's go back 14 days or so. That brings us to right here. I would say this one's a little bit difficult. Right here makes it difficult because we did break below this balance area low, but we could also just be expanding the range slightly and be forming a range that looks like this. So it's fairly neutral. I'm leaning more neutral bearish. So let me just type that in for the intermediate time frame. So neutral bearish. That's potentially more neutral. And then let's do the lower time frame, and then I'll get to your question, Wayne. Okay. So I'm looking at past 1 to 4 days, and this will be bearish. So past 1 to 4 days is just this data here. The highs are getting lower, and the lows were getting lower as well. So again, this is very similar to what the ES looks like. So Wayne asked, what about arrival to zone? Do you like scary arrival, or what about basing just before zones? So typically I have limit orders at the levels. So I'm not waiting for confirmation. So if it comes down and looks scary, it looks like there's momentum, I have to quickly decide, is this very strong momentum that is going to break the levels, or is it momentum where it could turn around? And something that helps me determine that is the key reference areas. So if we had broken a key reference area already during the day and it's looking like momentum and it's coming quickly into the zone, I won't be taking it. But if we're in a more choppy environment and it looks like it's coming in quickly, I'll take the trade. That could just be an exhaustion trade. So the chart gets exhausted coming into the zone quickly, and then it can give a quick, nice reaction away. And if it bases before the zones, more likely than not, I'll be canceling my order. But you have to determine your rules based on your setup. So is it a tradable reaction zone, or is it a reversal zone? So let me quickly go back to the ES. So on this zone here, this is a key reference area, really important level. If price comes down quickly and begins to base here and goes flat before the level, I will still keep my order on inside of this level, because for me, this is a reversal level. We can see price reverse from here and give a big reaction away, even if there's some basing. You might get a candle that accelerates down and breaks the basing area, but I'll still be taking this level. And this, I'm talking about lower time frame basing, not higher time frame basing. If this begins to base for a very long time above it, then I won't be taking it. But if it's a tradable reaction level, so like on this chart, I have all of the minor levels all drawn out. If it does that basing before one of my minor levels, I will take the order off. Off of the more minor support and resistance, I'm looking for around a 2 to 2.5 hour reaction, usually exhaustion reaction, where it comes in quickly. I'm looking just for a quick reaction away. So let's continue on this NQ. So key reference areas, again, we're going to go through them again on the NQ. So let's zoom out and find our ranges, first of all. So this is a range that was forming. We have a smaller range in here. This one's a little choppy, but you can have another one that encompasses both of them, and then another one here. Again, this is fairly similar to what the ES looks like. So I'll breeze through this one a little bit quicker. But in terms of key reference areas, major levels, I would include the new lows that were created on Thursday and Friday. This is the balance area low from before. This level will be the high volume node. It's the middle of this bigger range. And then we have the balance area high. So the top of this bigger balance area. And I believe, oh no, this is the all-time high. This is a very good example of the selling tail that I was talking about for key reference areas. This is the all-time high. And look at the strong selling tail. Big rejection away. That shows strong directional conviction. Okay. I would have another level here as well. Maybe 2 levels split up, one a little bit lower and one a little bit higher to encompass this. But this is your balance area. This is balance area low. This is a balance area, and this is the balance area high. Let me just quickly change the colors. This is another important area. This could be a bull bear type zone, which is another key reference area. So resistance, and then it acted as the directional move up, support multiple times, resistance, 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 or support, sorry, support, support. And also this is where the breakout occurred. Let me get rid of this. This is where the strong directional breakout occurred here. And it's also support, and it acted as resistance again. So I'd say that that's your major support and resistance areas, or your key reference areas, all marked out. You would have another high volume node here as well. Forgot about this one. This is the middle of the range. Okay, so that covers most of the key reference areas noted here. And then you would have to go onto the lower time frame, or you could use the 1 hour to find your more minor support and resistance areas as well. So just an example would be here. So this is a smaller time frame balance area, acted as resistance and now as support. And then inside of these key reference areas, you can refine the levels even more if you want on the lower time frame. So this is support and resistance, strong directional move away, support and resistance in the past as well. And then you can have multiple smaller levels to break it up. This would be an open gap still. This is where price gap down after one of the days. Important level. Support and resistance through here. Support, resistance. I would also want to include this strong wick down here as well. You could open the level up like this. Include these previous highs as resistance. This level overlaps a little bit with the key reference area. This is a smaller balance area low, resistance, resistance, strong directional move, has all the characteristics of a stronger zone up here. And then I would also draw out the Fibonacci. This was a strong directional move down. We could see a pullback and a continuation. So is the intermediate time frame going to remain in control? That's the question that we have to ask. So if price breaks back above this open gap area and above the strong directional move, high volume node area, key reference area, then the buyers could be back in control of the intermediate time frame. So it'd be something like this: reaction, pull, got rid of it, pull back, and continuation into the higher time frame level. Let me draw out some of the scenarios quickly. So the question that I posed earlier was, could we just turn into a higher time frame balance area? So we could come to either retest this support area and head higher, or we could test the level below and come higher, and then we form a higher time frame balance just like this. And we begin to chop up a little bit. That'll make trading conditions a little bit more difficult. Or could we see the sellers continue to be in control, break this level? I would expect this area to hold on first test, especially since we've seen such an extended move with a little pullback or balancing. But eventually we could break this area, pull back into it, and continue to the short side. Definitely be looking for some choppiness before breaking any of the more major areas due to this extended move, like I spoke about on the ES. So this move is 780 points. Average move on the NQ per day is around 300 points a day. So this is like 2.5 days of movement in one line. And then you could be looking for shorts as well, as the intermediate time frame is more in control currently. So reshort when price comes to here, or short when price comes up to the next area. And then if price is able to swiftly break this level, we could see price pull back into here before we get a continuation into the next key reference area above. I would expect reactions from these smaller zones in between though. There's another good resistance area here as well. Resistance, 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 and then support with this wick. But again, not as strong of resistance as the higher location. Do you guys have any more questions about the NQ? Nope. Okay, let's move on. Just let me know. I can always go back. Oh, 1 second. Sorry about that. My Discord just crashed. Can you guys hear me again? Yeah. Okay. Sweet. Sorry about that. I don't know what's going on. Okay. So let me erase some of these zones. These are the zones that I drew up last time. Again, I'm drawing them based on the same principles that I spoke about. we can actually look at some of them from last week. So this would be balance area low level. Price broke out of the balance area, pulled back, continued lower. And then when we got the strong pullback, where did it pull back into? High volume node. So this is the high volume node of this balance area. Okay, let me erase them and I'll redo everything. I'll leave these higher ones. Okay, so let's look at the higher time frame trend. So if we go back, let's go back 3 months. Uh, okay, 3 months is all the way back here. So we're bullish. 3 months goes back to around here, but the lows are getting higher, the highs are getting higher. Higher time frame, bullish. Okay, if we look at intermediate time frame, past couple of weeks, let's go back 14 days. So it's right up to here. We are going to be bearish. So the highs are getting lower, the lows are getting lower. Bearish. And then intermediate time or lower time frame, past 1 to 4 days. So we got 4 days. Brings me to here. So I'll call this neutral bearish. So the highs are still getting lower, but this more recent move up is getting rid of some of the bearishness. So if we were just like this, that would be much more bearish than when we had this move back up. So could that be the higher time frame buyer stepping back in? Neutral bearish. Oh, okay. So let's look at the key reference areas. We'll do the same thing. So again, let's break down these areas. Balance, balance. I already had this one drawn out. Balance, and then balance. So these are the main levels we're going to be looking at. Let me draw out this area as support. This area is like the bull bear. This is very similar to the NQ and the ES, but we also have this these wicks down below. So it did try and break out below a little bit. I would still have this level drawn out and then maybe just a smaller level at this wick. But if you can see over here, I put this support level below this little basin right here. We have this miniature basin. So we have this bigger basin. Price went up, pulled back into the high volume node, broke strong up, pulled back, and then this is where the stronger direction came and broke us out of this miniature range. So this was the origination of this push up that broke us out. So the zone goes underneath that basin. And then as we can see, we got a little bit of a fake out right below this level. So there's a lot of momentum on this day because of the other indices. Price was able to break it, but then eventually got back up and held it still. So I would say this is still holding this level. So we could see price come back down and continue up from it, or at least give another reaction from here. Okay. Now, if we're looking at balance area high here, what we could do is draw a level like this of resistance that also encompasses this strong directional move down. And then if we're looking at balance area low here, I have a level like this. And then also this would be a strong level as well. This is where the directional conviction started from. We pulled back up and then we had directional conviction to the downside. This level that I already had drawn, high volume node of this balance area, strong directional conviction. And then this is the top of the balance area, strong directional conviction, selling tail as well, strong key reference area. And I think it might be all-time high. Okay. So in this area, we have two ranges, I would say, or three ranges, you could say. So we have the smaller range, and we have this range, and then we can combine both of them. So I would also have another level right here. Directional conviction to the downside, top of the smaller balance area. But the bigger the balance area, the more important the levels will be. I'll show you on the dollar CAD on the next chart. And then high volume node was in the middle here, and it's where prices already reacted from. And then I would have had the balance area low here, but it already has been broken. You could have a support and resistance level through here. So part of the balance area low, this is support and these are resistance here. And then it's acting as support again here. Not as good of a level though, I would say. It was a good level in the past, but I would say this is a weaker area, not a key reference area. So these would be the major key reference areas. Again, can we maintain the bearishness on the intermediate and lower time frame, or is the higher time frame going to step back in? Again, if we zoom out, you could have multiple Fibonacci lines drawn on this chart. So you could have the major swing, which is bottom of the move to top of the move. And as you can see, we haven't even pulled back to the 38% retracement. And this is already a key reference area, but it's even more important now because of the Fibonacci. And we only ever get invalidated when we break below this pivot area. So we could basically still pull back a lot before we invalidate the higher time frame bullishness of the chart. Or you could have the Fibonacci drawn up from the top to this more recent swing up. And we're around the 50% retracement of the more recent swing. Or what you could have had earlier is the more recent swing to that, which was this swing here, which we already invalidated. Okay, so based on scenarios, if I am a higher time frame buyer, I wouldn't want to see this level break. This is a very important level where we could see more higher time frame buyers defend. So could we see price pull back into this level before we see continuations up? Potentially. And if we break below this area, I would expect to see price come into this area at the very least. This is the 38% retracement on that higher time frame swing, balance area low, directional conviction, key reference area. Okay. Let me draw out the scenarios with the other blue lines. So we could see something like this. Break, pull back, continue into this area. And then we could see a long from this area as well. And then right now, since the intermediate time frame is short, you could still be looking for shorts. So you could have had the Fibonacci lines drawn up for the long side, but you can also have it drawn up for the intermediate time frame bearishness like this. So as you see, this pullback into here was the high volume node, which is a key reference area, and also the 38.2% retracement. So if I was a seller, I would assume that sellers are losing their control when we break back above this 61.8% retracement, which again is another key reference area. Balance area low, directional conviction. And it's like a bull bear type area as well. So another scenario you could have is if price pulls back up, you could short again from here. Oh, misdrew that line. Short again from here, or you could short from either of these two higher locations And again, you can finally short from up here as well. Just a reminder on all of these levels that if we have momentum, the levels are much less likely to work. But one thing that I like to do with these key reference areas is, let's say we have momentum on the day. So this is a very strong level of support. So let's say we have momentum to the downside. Let me move these out of the way. So let's say we get strong momentum to the downside, big candles. We get a really tiny reaction out of here, and we get a continuation into this higher time frame area. If we haven't had any major pullback and price looks exhausted into this level, and if we measure it, I'm not sure what the ATR is for the US 30, but let's say we measure it and it is 60 to 70% of the daily average entering a higher time frame key resistance area, I will take a stab at it, even if it looks like it has momentum against me. And we have been breaking levels. These are the higher time frame levels that have the highest probability of working. And guess what? If it breaks this level below, it's telling me, okay, we really have momentum. Can we continue even lower? Maybe I need to get on board that. Do you guys have any questions on this US 30? Nope. All right, let's move on to the dollar CAD. So this was the chart that I wanted to show you on the daily. Again, I wanted to show you because of the range that it's forming. So when I was talking about balance areas, and the longer they've been balancing, the more important the levels are. That is this right here, balancing for 2 years, and we're coming right into the top of the balance area. So it's a really important time, because anywhere in the middle is not too important on this, but either of the extremes are super important. And if we are able to break above the balance area high, we could see strong continuations into much higher time frame locations. So if we look over to the left, we have this balance area, which is, again, this is the daily chart. So this is a long-term balance area. And then we have selling tails with directional movement. This is an extreme, also a smaller balance in here as well. So in terms of higher time frame, we'd have a level here and then a level above as well. And then you could also have your high volume node area right there. Again, you'd have to refine these levels on the lower time frame because this on the daily. But if we're able to break out of this super long-term range, we could see extensions into either of these levels above. One thing that I mentioned last time with this chart is how directional it is. So we've gone from like the bottom third of the range, like the middle to bottom third of the range, all the way to the top of the range in one straight line movement, basically, little to no basing. Again, I would not think it's very likely just to see it break out in a straight line like this. It always can happen, but definitely not as likely to happen. So could we see some sort of range form before we see the break? Yes. Or a range form before we see the breakdown? Okay, let me go back onto the lower time frame. So on this chart, this is a very, very key reference area because this is the top of a 2-year range. Super important. And last time I broke up this key reference area into one smaller level as well, and that seemed to be holding fairly well. If I draw out this as the more recent smaller time frame range, this one again, and then we have this one, then we can get our smaller time frame key reference areas. I'm saying smaller time frame on this one because the very high time frame will be more important on this chart. This is the high volume node of this smaller range. And then this level is the top of the balance area. This bottom of balance area. This is high volume node and bull bear zone. And then we have top of balance area, but it kind of got chopped through a little bit. It's not as nice anymore. So this area was, let me highlight this one. This one is bottom of this balance area and high volume node of this balance area. So this will be an important level. You could have another level slightly higher as well, right here, because of this directional move up came from this area. Let me change these to green. And then we'll have another high volume node in the middle of this more recent range. And then we have this white level inside the red level will be acting as support now because it was the high of the balance area previously. Now it could act as support. But one thing I want to note on this dollar CAD chart, if you are trading it, a couple things to watch out for. If the sellers look like they are stepping in control in a big way and begin to break the levels to the downside, showing momentum, I would not expect any of these levels to hold. I would expect reactions at the levels, but you have to remember how important this area is. This is the top of a 2-year range. So there could be so many orders up here willing to just rip through and destroy all of the long orders, especially since there's been little basing on the higher time frame and it's gone fairly straight line up. And then another idea is if we do break above this level, can we sustain? So can we sustain the breakout, or are we going to break the level and fake out and go back inside the range and then see downside range expansion? Stacy asked, where would your entry short be? So I would need to know a little bit more about this chart, and it depends what type of trader I am. So am I going to swing trade, or am I going to day trade this level? So I would say based on how high time frame this is, a swing trade would be preferable, or a longer term trade, because in order to get a bigger move back into the middle of the range, it might take weeks for that to happen. So I would have to know what the daily ATR is, because I don't want to put a level that's like, that's 30 pips, right? I don't want to have a 30 pip stop loss, but it only moves 10 pips a day. I don't know what the dollar CAD moves. So I would have to go onto my pivots. Let's see. I'm not sure if they have the dollar CAD here on this website. No, doesn't look like they have it on this website. There is, I'll show you next week. There's another website that shows you all of the ATR for each of the pairs, but I would assume it moves much more than 30 pips a day on average. So you could just get in and put your stop loss above this level. You'd also have to go onto the lower time frame to the left and see what's over there. Just circle this so I know what I'm looking for. And is that the highest wick of this whole range? Oh, I don't have any more data over here anyway. Okay, let's see if I can go 15-minute and I'll look at those wicks. I'm not sure if I'm going to have the data here. Yeah, I don't have the data. The line stopped showing me what's over there to the left. Let me see if I can see it on the 30-minute. No, no candles over there. So I can only see it on the 1 hour chart. So that's unfortunate. So you're really kind of just going off the hour chart. So you could short here. Oh, I have to start my paper trading. Let's see. Let's see if I can put a trade on or if it won't let me right now. Market, sell. Oh, yeah. So it won't let me just because the market's closed right now. But you could have been short in here, but it would have to be a longer term idea. That's all. So if your lowest time frame you could trade on practically is the 1 hour, then yeah, you're definitely going to have to hold it for much longer. Do you guys have any more questions on this dollar CAD chart? So this is like the make or break zone right here. And then what I would be looking for on the lower time frame, if we open up on Sunday and we're going into the week, and we see buyer step in here, I would be looking for that fake out setup. I'll show you what that looks like on the next chart. One sec, let me drink some water. Okay. So let me quickly go over this fake out trade that you could have taken, and then I'll redo all the levels again. So this green zone was a key reference area, basing or balance area high. This was where we saw the pullback and then more directional conviction from here. It wasn't the origin, but it was still a good support and resistance area. Strong directional conviction from here. Price came into the level, multiple rejections away. So these would have been really good long trades to be taken. This is balance area low, good target area to get out of the longs. And then what happens here? So we break a key reference area. So the selling momentum was so strong that we broke below it, but we couldn't sustain below it. So let me go into the lower time frame and see what this looks like. Okay, so I'm not sure if this is a tradable time for most people, but the setups still work no matter what the time is. But if we're not in a strong session, like near the session open, and we break a key reference area like this, then oftentimes we won't be able to sustain breaking it. So multiple reactions from this key reference area. Then we had momentum step in, pushing price short. But we break the level, buyer step in. We break it again, buyer step in again. And then look what we start to do. We start to form higher lows, and then price turns around and goes back in the opposite direction. So this was at like 1:30 in the morning, which isn't really a session to be trading. It's right before Frankfurt and London opens, which could have given you some hint that maybe there wouldn't be enough momentum to break this area. But once you see price break below the level and then start to reject it away, when it's this important of a key reference area, that could give you information that we could turn around and see a fake out, or it's a mini reversal. Basically, it's not a reversal from a level, it's a reversal after breaking the level. So you could have had a few entries here. You could have entered, you could have entered here and had your stop loss below here, and you would have gotten stopped out again. And that's okay. But you could have had another attempt here. Once it pulled back, another attempt here, or you get this basing start to form, which is basing above these lows here. And you could have had a breakout order here, or it breaks, pulls back into the breakout area. You get in again long here. Your stop would go below on all of these trades. The true invalidation point would be below the low. Okay, and then normally what happens on fake out trades, if it's a true fake out trade, is it does what reversals do. which will take out the entire move of the previous move from the opposite direction. So this was the range that we were in, the mini range that we were forming. This was the more recent swing down and push down that ended up breaking the key reference area. And then this is the fake out trade. It took you back into the start, the origin of the directional move down. So that would be your final target here. This is another important level. I would have been scaling out here, and then you hold the rest of the trade to the origin of the move. And then this one is actually a fake out on the opposite side. So we have the range forming. So the range got adjusted lower because these lows kept going lower, and we retested the balance area low again here. Strong directional move. And one thing about strong directional moves with basing is oftentimes when we see the directional move with no pullbacks, no basing, and we go from one side of the range to the other side of the range, oftentimes you'll get to the balance area high, which is this red level, and reject. But it didn't do that this time. It broke the level, but we'll often see it fake out afterwards. So for a true, strong, nice breakout, normally what we want to see, strong directional move, basing, and then a continuation. Or basing, pull back to the high volume node, then a continuation. But one side of the range, all the way to the other side of the range, could lead to a failed breakout. This time, when it did this fake out move, it didn't do it as nicely all the way to the origin. It took a lot longer for that to happen. It did pull back first, but it did end up getting there back into this final target. But it got 90% of the move, I'd say. Okay. So this chart, again, was one that we're talking about the timeframes fighting on. So who is more in control of this chart? Is it the intermediate time frame or is it the higher time frame? So if we draw the fib too here from bottom to top, we can see this is like right near the 61.8%, which is why it's so important to defend this previous pivot here. And we eventually broke below it, but now we're holding back above it again. So the buyers are still defending this area. So I would say the higher time frame isn't done yet, and they could still maintain the control. But the intermediate time frame is looking weaker and weaker, if you want to look at it in terms of that, or it's looking more bearish. So let's just do the breakdown: higher time frame, intermediate, and lower time frame. So if we go back 90 days, 3 months, it's going to be neutral, bullish. Bullish, but it's almost neutral. Then if we look at the intermediate time frame, the past 2 weeks, goes to here, it will be, let me just zoom in a little bit more. It's going to be bearish, but I'm trying to determine, is it neutral bearish or is it just bearish? 14 days. The lows are getting lower here and the highs are getting lower, but it's not a very nice like downtrendy move like some of the other charts. So I'll call it neutral bearish, but could very easily just turn bearish. And then the lower time frame, past 1 to 4 days. Okay, so that's from here to here. It's just neutral. So we're just in this choppiness back and forth, neutral. So we're at a really important inflection point here on this chart. Now let's go over the key reference areas. So let me draw out some of the balance areas. Smaller one. We have this smaller one, but that also encompasses this bigger one. And I'd recommend to all of you just to do this on your chart. Draw out all of the balance areas. This is how price moves. We go from balance area, and then we have a directional move into the next balance area. This one's a bit tricky here. It's like that, but we have the strong buying tail here as well. There's actually not that many balances on this chart. Okay. So what was this from? This is a high volume node of this balance area. This is the pullback and then a directional move after it. This is a strong level. You could just move it up slightly to also contain this strong directional move. I would move this down slightly. This is this smaller little balance area low. And look, it acted as support all of these times. Just missed it on this one. And then we broke through it. We broke through it again swiftly, pulled back into it again, used it as support before we continued up again. And then I would expand this red level that we had before. Or I could split it into two levels. I would definitely have this higher part here. This would be the more relevant resistance, but we also have the lows down here. You could just take all of it. So balance area low, balance area high. This is a bull bear zone. This is a very, very important inflection point. Red, red. Okay. Look how many times it's been used as support and resistance in the past, and multiple balance area lows and highs. Very important. High volume node, directional conviction from this area. This area is balance area high. This is high volume node of this range, balance area high. This white level that's a high volume node is also a bull bear zone. Look in the past, multiple touches into here. Okay. This level, look, it's the balance area low of this level and of this range. So super important. And then this level as well is very, very, very important because we had strong directional conviction away from this level. It's the balance area high, and it's the balance area high here, and it's a bull bear zone, multiple touches. So that fulfills multiple of the criteria for a key reference area. Now, if we zoom in a little bit, we will have a level right here. This will be the high volume node of the bigger range, and it will also be the balance area low of the smaller range. So it's definitely not as important as this level, but this will still be an important level, an important indicator of who's in control. So if we swiftly break below here, break this basing, pull back into it, we could see continuation into here or even lower into here. So I would say the buyers can step back in, and the higher time frame buyers will need to break above this level, pull back, and continue. And preferably test this level and then this level. These will be the strongest areas of resistance that they'll need to keep breaking in order to keep showing that they're in control. But if we maintain below this level here, the sellers for me will still be in control and in strong control as well, because the sellers haven't had that many big pullbacks. And if we are basing at a lower price and we're basing by an important level, a key reference area, then we could just break down and keep going short. And they could eventually end up changing the higher time frame to neutral. This will be a very important spot. So definitely on the higher time frame, if we break this level, I could see price going all the way to here before eventually having a larger pullback and then lower and lower into these areas. But this area will be, if we have a key reference area and all these red zones are key reference areas, this one is the key reference area to keep an eye on. Do you have any more questions on this chart? Nope. All right. Good, 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 good. Let's go to dollar yen. Alrighty. The levels seem to work pretty well from last time on this dollar yen chart. This must have been the open, right? Yep. So reaction worked from here. This level worked twice. This ended up pulling back into the area again before rejection away. And this previous resistance held as support multiple times as well. Let me just get rid of them. And we do the same thing again. Let's zoom out and look at the higher time frame. Where 90 days brings me to right here. Okay, so past 90 days is this. So I would weigh more heavily on this more recent upswing because all of this got invalidated by this recent directionality and upswing. So I will call this bullish. Let me get rid of these. Intermediate time frame was this here. So we're definitely up in the past 2 weeks, but we've begun basing. So this could be bullish or neutral bullish. So I'm just going to go with neutral bullish. But as soon as we break above the basing, so we have this basing here. As soon as we break above here, then we'll just be bullish. So we'll change neutral bullish straight into bullish. And then the lower time frame will be neutral, I would assume, past 4 days. We've just been inside this range. Even though these highs are getting slightly lower, we're still within this range area. So it's just, for me, would be neutral. Okay, let's draw out all of the ranges again. So we have the larger range, but then inside the larger range, you have the smaller one. And then there was this one here as well. Lower, you have a range here. This is like a formation you see happen often on multiple time frames. It does, I showed this off a couple weeks ago. Directional move up, and then instead of having a sharp pullback, it does this basing up type pattern before you get another directional move up again. This can happen on the 1 minute, it can happen on the 1 hour or the daily chart. Happens on multiple different time frames. And then let's see. I mean, this has been fairly directional for the past couple months, so there's not any major ranges. This one will be more key reference areas based on other things. So this area, for example, is extremely important because it's a bull bear zone where we had directional moves on both sides. So we had a directional move down from here. And then once we broke back past above it, we had a directional move up from there. Okay. And then this will also be an important level. Directionality from here. Again, I would draw the fib on multiple different time frames to see where the important retracement locations are located. I'm just gonna look up here. So we have this bigger range, and then you have the smaller range inside of it. You seem to get these smaller ranges on the dollar yen, not any of the bigger ranges like on some of the other pairs. But as you can see, these principles still work. Let me just show an example right here. What level is this one hitting? This is hitting the high volume node. So even though we traveled through the high volume node, so we went up, pulled back into the high volume node, broke out of one side of the range, it failed, went to the other side of the range, broke out, pulled back into the high volume node again, and then you saw the direction. Let me just adjust this level. You could have one level at the top of this bigger range, and then you can have a level here, which is the smaller range, and it also lines up support and resistance directionality, and then you have the high volume node right here. And then balance area low would be right here. Look at all the support here, and then resistance on the other side. And then I would have another level here as well. We have this previous support area, and then it acted as support a couple times, and then a little bit of resistance. This is definitely not as strong of a level as any of these are, though, I would say. Yeah, like it just got blown through here. So I can delete this one. This one held well, but got broken through now. But it's also the high volume node of this range. I'll refine it a little bit more than that, though. I would have it like this. Similar, but slightly smaller. And then we have what is the top of the balance area now, and was also resistance on the left. So there could also be a level through here as well. Again, this will be a more minor level. This is the bottom of this balance area, but look, resistance, support, 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 resistance, support. But it's gotten chopped through too many times for me to be super strong support or resistance. And then we'll have high volume node of this smaller range that also lines up with this open gap and this support. And then we have bottom of the balance area. And then I would have another level down here. This is buying tail and also the origin of this move up. So this is a good example of the buying tail again. Big wick up. Even though it wasn't extremely directional afterwards, this is an important level. It's also a pivot area. Let me just change these colors to green. Okay. Let me just zoom back out again, get a better picture. So this is higher time frame resistance again. So we saw this large, massive move to the downside here. And if we draw the Fibonacci up from top of the move to bottom, you could draw it to either here, or you can draw it to the very low here. Either one would be okay. But you can see we're right around the 61.8%. So this is where the higher time frame might start to flip. I would only say that the higher time frame is really, really flipping into the buyer's favor when you break above this pivot area here. This is where we saw the second directional move to the downside. We had a larger pullback, second really strong directional move, and it's the balance area high. Super important location. So I would, oh, not that. I'd put a red border around it here, and then this is also an important location. And then also we've started to form a little range here as well. So this would be balance area low. So if the buyers want to maintain firm control and really be in control, you wouldn't want them to break below either of these levels here and continue higher, breaking above these ranges. But we could see price start to pull back. So I'll just drop the fibs super quick. Let me delete this one so it doesn't get too confusing. So that is from very bottom to the top. And then you could have another one from the more directional move. So this was a really big pullback here. So you could have it starting from this directional move up to the top. They line up fairly well together. But this is just to show you that on the higher time frame, we could see larger pullbacks and the buyers could still remain in control based on our trend analysis. But if we look even higher time frame, these are the pivotal points going back to the beginning of the year. This area is going to be important. You have a previous big pivot area, and it's the 38%, and it's the start of this directional move. This is a good bull bear zone. So I would put the border on it. So definitely on the long side, if price pulls back, I am looking to buy this level and this level 100%. This is also a good level to be buying from. And then in the meantime, as long as we remain inside of this range, I can't draw. Inside of this range, you could short the top of the range or go long at the bottom of the range. Do you guys have any more questions on this chart? I see Wayne's typing. I'll just wait a moment. Thank you. Awesome. But just know on this chart, just you have to realize the fight between the buyers and the sellers at this location specifically, or rather this location and this location. So we could see a bigger swing to the downside before the buyers step back in. Okay, let's go to euro dollar. Okay, let's zoom out. Let me just delete a bunch of these levels. I'm gonna work back through it. Okay, let's go back 90 days. Oh, wow. Goes all the way to there. So we're looking at this. So I would say that we are neutral, or we're bearish to neutral bearish. So you could take this swing more into account like we did last time with one of the other charts, which I probably would for this one, because we're breaking major areas of support over and over and over again. And then we're pulling back into these areas of support, now turned resistance, and holding them as resistance. So I would call this bearish to neutral bearish. Intermediate time frame, just back a little bit. Okay. Intermediate time frame, 14 days. Oh, wow. So that's this section here. I'm going to call it neutral. So we have broken the highs here, but we swiftly rejected and are pulling back into the middle again. And then with the bearish higher time frame, I wouldn't quite call this bullish yet. I would need to see more to tell me that this is neutral bullish or bullish. I'm just going to call it neutral currently. And then the lower time frame, which is the past 4 days, brings me to there. So we're looking at this. And this one you could call either neutral or neutral bullish. So our highs are going up, and then our lows were going up, but then we began to break on this last day. So if we didn't have this break here, it would be much easier to say that this has just been bullish. But this is a strong selling tail with a strong directional move breaking these support areas. So I'm going to call the lower time frame neutral bullish, but this can easily become neutral, which can easily become neutral bearish due to all of the other time frames. Okay. One thing that I think is important with those key reference areas that I've been talking about is understanding where all of those levels are so that you understand how the trends change. All right, let's look at some of these ranges. We have a range here. We have this smaller range. This is that move again, directionality, smaller pullback, and then it's sort of just like basing down. It's just not like a defined range. It's sort of just moving down. So these are where you look for your bull bear type zones instead of the ranges, because the ranges aren't forming nicely in these areas. You get like smaller ranges like this one. Tiny range, tiny range, tiny range. But those aren't that significant when you're looking at the higher time frame. But I would say you could have a range here. And then you have the smaller one here, which is part of the bigger one, smaller one. And then this is the important, the important one would be here. And the smaller one inside. And then you have this big one. And then you also have them in the past. I'm not going to go that far back. Okay. So let's draw some of these levels. So again, this right here, selling tail and balance area high. I would leave it with these red lines as well. This is a very important area. This is a smaller balance area high, directional move down. This has already given us a directional move down. This is an important level. I actually drag it down slightly and expand the top. We want that full wick in there, but also these previous highs as well. You could split it into 2 levels if you wanted. Let's keep going with the resistance. That's a more minor area of support and resistance. So is this. And then this one will be a little bit stronger. Border all the way. So this one's strong because it's balance area low and also this balance area high. Multiple touches, bull bear zone, support and resistance, nice area. And then this next zone, you could make it one big one. I'm going to split it into 2. This is balance area high. And then the level above it is very, very important. So this one is the major balance area low. I need to actually account for this wick here on the left. So major balance area low, and also the breakout spot. right here. So this is where we had directional sellers stepping in and pushing price down. This is where everyone got stopped out and you see the liquidation. And it's not even tested yet again. So when we see price come back into here, it's a fresh zone. So we could see a nice reaction out of here. This is like balance area high of the mini range and directional origination spot. Important. But I would say this level below is still more important. And then you could keep going with more and more zones, but this is so far back. If price comes back up, I'll be doing all those. Inside of these levels too, you'll have the high volume nodes. I wouldn't think that this would be as important though as the balance area low or high. Okay, so this level of support is previous balance area low, buying wick, support, support, acted as resistance, resistance, support, high volume node of this area, strong directional move. This has a lot of different characteristics to make it a strong support area. And then this area below would be the balance area low. And then I would have another minor level in here. This isn't a key reference area. This is just a smaller time frame. Support and resistance based on this previous low, holding a support again, resistance over here. Now this level was broken. This could be a bull bear zone. This is one balance area low and balance area high. So this is balance area high and then the low over here. We broke through it, pulled back, and we're breaking down again. Could be important. And then you have the high volume node on the inside of this range again. Let's see what's the left down here. This is high volume node, important level. This green level that we're currently at is also fairly close to this balance area high. I would want it to be slightly lower, actually, to encompass this wick a little bit more. You could have another level through here. Wouldn't be as major as this one. It's pretty close to how I'd have it drawn. That's what I did last time. Okay. So in terms of scenarios, we could see that the sellers are stepping in a big way. So the buyers over here on Friday stepped in really strong, but then quickly got rejected. This is giving us a lot of information this week. So can we hold below this level? Are the sellers going to, if price comes back up, are the sellers going to push price down again? Or are we even going to pull back up that much? If this is true higher time frame sellers stepping in, we don't want to see a big pullback here. We want to see continuations to the short side. So maybe a small pullback to here, continue to test this level. Or maybe we just test this first and then pull back. You could draw the Fibonacci out on this lower time frame like this. These are the valid pullback areas you could look to trade from. There's lower time frame support and resistance in here. Support, resistance. You could trade from that near the 38% retracement. I would stick to, I would be looking at shorts right now and then sticking to longs at higher time frame key reference areas. So you could long from here, but if this has too much momentum, we could break through it. And then I would be looking at long from here and then here as well. But if price breaks this area, I would expect it to continue short to retest budge. Sorry about that. I don't know what's going on. I'll fix this for. Oh, hello? Can you guys hear me? Uh, can you guys hear me? I don't know what keeps going on here. I'll try and fix this for next week. Sorry about that. All right. Where was I? Okay. So yeah, if price breaks below this first high volume node area, I would expect price to at least test here. You could attempt a long, but if the sellers are really in control, I would be wary based on the trend analysis that we could continue going short. Let's pull up the. It hasn't had a sizable pullback in a long time though, so we could see a larger pullback first. We could see a larger pullback into one of the higher time frame locations. But this is telling us potentially that we're very aggressively selling if we can't even pull back up to these better resistance areas. Do you guys have any more questions on the euro dollar? Nope. All right. I will move on. We have two left. We have Aussie dollar and gold left. Alrighty. So we're going to do the same thing. Higher time frame, intermediate, lower time frame. Let's go back 90 days. Okay, so 90 days brings us to about there. It's fairly neutral. So what I'm looking at here is major low. This is like a major high. This was a major low, major high. But what happened? We broke below this major low area and created a new low here. So I would say it's more neutral than neutral bullish. But if price were to break back above this previous area and pull back, I could see it going higher and turning back into neutral bullish or full bullish. And then we'd really have to start breaking below these types of lows or this low to make it full bearish. So I'm going to go with neutral. Okay, intermediate time frame, past 2 weeks. Too far. 14 days brings me to there. So we're looking at this, which I will call bearish. And then our lower time frame, 1 to 4 days. We'll go 4 days. It's neutral. So we've just been in this range, chopping up. Then if I zoom out on the chart a little bit, and I see for the past, what is this, month. So the past month has been a strong bearish move. So right now, I would say the bears are more in control. This here would have been an important higher time frame area of support that we broke. And then this area right here is also an important higher time frame area of support, which we broke back. We just about broke below. So I would say right now it's looking more bearish in the past month. But we have to mark out the important support areas to determine where the higher time frame could potentially step back in. Okay. Let's do our key reference areas. And I'm just drawing the boxes for you guys. I don't normally draw the boxes like this, and you don't have to either. I just help find that it helps visualizing it a little bit better. Let me go over here now. I think we broke. Yeah, we're below here. I don't need to do these ones. Uh, this is important. So when I draw this range here, you could draw a little bit higher as well. But the important part to focus on is this bottom area. So we broke out below what was, let me take this out. We had this range form, and then we broke out below it really big, and then we quickly rejected back away. But then once we broke back inside of this previous range, the lows began to hold again. So these lows are going to be important again. And then this was high volume node of that previous range as well. So I'll just draw it like this. So let me start with drawing these levels out. So this will be very, very important. I don't know if we're going to be able to see. Oh, I need to make them green. I don't know if we're going to be able to see on the lower time frame of this wick, but if you could, I would go back there and check. This will be a more minor area of support. This will be an important area of support. This will be an important area, high volume node. I would say that this is less important than this area. And then we have another important zone through here. So this is multiple balance area highs, support, support, good zone. Now let's see, go back over. So multiple tests of this level gave a couple reactions, but like I said, if we're strong in one direction, the levels aren't going to be holding that well. We'll eventually break through them, but it did give some reactions. But now I would delete this area and I would modify it just like this. And then we will have a high volume node inside. And then we will have resistance, top of the balance area. And then I would have another zone here as well. This is a more directional move down, a mini pivot area. Not super important though. Again, this would be the more important area. This is also, we gapped up here and then saw the move down from here. So this is important level. And then we have high volume node, balance area high with balance area low. So this will be important. I'll combine the two levels into one. I'd potentially even open this up to account for this wick. Again, you could have two different levels in this zone, but I'll keep it as one for simplicity. This is a smaller range area, but it's also the high volume node of the bigger range. And then top of this balance area is the high volume node of the previous range. It's actually slightly lower. I could move it up slightly to account for a little bit more. And then high of this balance area, and so on and so on. Okay, so what are the important levels here for me? This is important. And just because, again, just because it's important doesn't mean that it has to hold, but it gives you so much information when it doesn't hold. So it's a high likelihood of holding, but if it doesn't, it's telling you a lot. Let's Just look to the left, see if it lines up with any major support resistance. So I would move this level up slightly to account for this wick here on the left as well. This one matches up nicely with this high volume node and wick. I think that's fairly good. I'm fairly happy with those zones. So definitely these highlighted zones are more important, I would say. This will be an important zone as well, but I don't think it's as important as the other ones I have marked out. And then you could draw the Fibonacci lines up to determine your ideal pullback zones. So this one actually matches up nicely here, but any of these zones would work basically, and a pullback is valid at any of these zones. So you'd only really start to invalidate this short bearishness for me if you begin to break above here, but the 61.8% is here. So there is actually another level here. We have this basing, so you could have balance area low, balance area high, and high volume node in there as well. But this is a very, very important spot if the sellers want to maintain control. If the sellers want to maintain control and be very aggressive about it, we shouldn't really break back past this area. So we could see a pullback into either here or into this highlighted zone before we see the shorts play out. If the shorts will continue to be strong, we could see price reject here, preferably this level. I would have an automatic order to go long at this level. And then somewhere in here, you'd need to refine this because it's a big wick. This is huge. But definitely this level. Very nice. And then on the lower time frame, the sellers are even more in control if we don't break back past this range. So if we don't break above that range, it is very good for the sellers. And I would be more aggressively selling if we can't break back past above this area. But on the Aussie dollar, I would be more bearish currently than bullish. Do you guys have any more questions on this one before we move on to the last chart? Alrighty, let's do it. Oh, all right. Let's see higher time frame. We go back 90 days. Oh, that's far. Okay, well, we can see it's very bullish. This one is like straight line bullish. This one's making all-time highs. I mean, this is one of the most bullish charts you can probably find. Bullish. Intermediate. Last 14 days. Okay. So that is this area here. It's between neutral and neutral bullish, but because of this more recent strong directional move down, I'm going to go with neutral, especially since it's doing that at all-time highs. We have to be careful if it is going to do a topping pattern. Okay, last 4 days are bearish. Okay, so let's draw out our more recent ranges. We have this one here. We have a smaller one here, another smaller one here, and then we have like this bigger one right there, and then we have another bigger one like this. I'm not going to go this far back for now. Potentially, if price starts to come down, I'll go over this. These are really nice ranges. So like this would be a nice bull bear zone for the long side. This would be automatic order for the long side because balance area low, balance area high, multiple touches in on both sides. Very strong level. Okay. And then there's another miniature level in here as well. So there's a little range there. Let me start up at the top and I'll work down. So resistance, get rid of the line. Okay. High volume node, start of the directional move, top of the balance area, all-time high. So for me, this is actually going to be the strongest area because this one is the high volume node, start of the directional move. And this is the all-time high, which can be important. But like I said before, oftentimes when we reach the all-time high, it'll eventually go on and make a new all-time high. Oftentimes the level before the all-time high will be the deciding point if we come back up and then reject away and make a new lower high. It doesn't always happen like that, but oftentimes it does. Okay, the next level will be right here. This is going to be a very important level. Balance area high of the bigger range, of the smaller range, and the recent pullback that had directional movement. Also, previous support. Good spot. Okay. This level was actually the high volume node of the smaller range, but we've already tested that now. So we'll see if the second test can hold over here, but not as likely due to the first test already happening. You will have smaller resistance area in here. It's balance area high of this previous range, low of this range, and then support and resistance through here. Definitely not as nice, not a key reference area that's super strong because we've gone through it and used it a bunch. And then here I would have a smaller level because of these wicks as support and resistance. And then this level is a little bit difficult to define. This is like the true balance area low. But then you could have another level in here like this as well. There's a small gap right in here, and then also support multiple times. But this will be the more important zone. Okay. This will be important because it is the start of a directional move up. We have a smaller range right here. And that lines up perfectly with this. So this will be a strong level as well. So very high of this range, high of this small balance area, and it pulled back and kept going up. So resistance multiple times and support. And then another level through here that lines up with all of these other highs. I would even potentially drag it down to include more. Actually, I'm going to keep one level like this, and then I'm going to have another level below. So I would say all three of these levels are super important because it all lines up with this previous basing area. All pullback and continuation areas acted as support and resistance. This level would probably be my favorite. Got the most touches through this level. Oh, what is going on here? Another level, balance area high, pullback area, couple touches, not as important. Okay. This is balance area low, and like the pullback area before the continuation. I would include this little pivot on the left as well in it, just to be like that. And then this one would also be important. Balance area high of the mini range, balance area low of the bigger range, and then smaller high volume node. And then finally, balance area low and major pivot point. So this will also be very important. If we look at the chart, not in as much detail, just zoom out. We get a pivot, pull back, pivot, pivot, smaller pivot, continuation. This is an important pivot area. And it's like the biggest pullback before the continuation. So this area here is the origination of the entire move long. So when you draw the fib up, you could draw it from the very bottom to the very top, which the 38% actually lines up nicely with these levels that I've drawn. Or you can draw it from this more recent move to the top. And then the 61.8% lines up with these zones again. Or you could draw it from the even more recent pivot here to the top. But we've begun to invalidate that. And that's why we're going neutral on the intermediate time frame. So even though we're going more neutral and a little bit more bearish on the more recent time frames, I would still definitely be looking for longs at better areas of support. But as you can see, we've been going up fairly consistently, making all-time highs. So we could see some larger pullbacks. This is your closest area of higher time frame support. If we break this, I would assume we pull back into one of these three areas. This is a very important set of zones. And if we break back past below here, so we do something like this, I would assume we pull back and eventually continue to hit this lower area before we get a reaction up. This is also an important spot. But I would still have this as the more important location. So I would be fading all of these to the long side. I would have limit orders at all of these major levels of support. And then this area of resistance, super important as well. So if we break back past above here and pull back, I can see us testing this level and potentially all-time highs. This is super important because it matches up with previous resistance here as well. Could we form a new range that spans from all-time high to this previous balance low? Yeah, we could. Could we form a new balance that goes like this as well? We could. That could look like a little bit of a head and shoulders pattern as well. I don't know if you guys know what that is, but you get one shoulder on one side, which is some basing, directional move up, which is the head, and then you get the other side, which is basing, and then you could see a downside move back this way. I don't trade patterns too much, but I always keep them in the back of my mind. So you could potentially short here or here, but primarily would be focused on more long setups on gold. Election is Tuesday. Could it offer a change of direction or big continuation? To be honest with you, Stacy, I don't know if I was trading every single day the last time we had a presidential election. I think I've been daily trading for 3 years now, maybe nearing 4, but I don't remember what happened during the last election. All I can say is I know with election time trading, the volatility is increased. So that means you can get larger ranges or more directional days. You're less likely to have a really tight, choppy day that's really small, with exception of potentially election day. Because on election day, banks, institutions probably will not want to put on excess risk. And once whoever wins happens, then people will be more willing to put their money into the market based on whatever they think is going to happen. But all the principles still stand about levels holding or not holding and momentum. So just know that this upcoming week, we could have more volatility, bigger ranges or bigger directional days. Um, I don't know about continuation of gold. I'm not sure how the election influences gold specifically. Do you guys have any more questions? Either about gold or in general? Let me pull up the news for the week as well. Um, awesome. Great. I'll keep doing this every weekend, guys. Especially, I know a lot of you are the VIP students and everything. So you get this every single week. So when you come up with questions or have questions on any of the charts, just let me know. Let me just pull this news up quickly. Uh, okay. Yeah. So we could have like extreme volatility this week with the election. And also we have Aussie and we have the pound interest rate. Um, so, oh, and dollar FOMC. Yeah. This could be like a extreme week. Um, but we know on election day, they don't always have the results of who wins on election day. So oftentimes it goes longer. And then we also have FOMC. So we might not see the extended moves until Thursday afternoon, Friday. Um, so I'd be careful trading earlier in the week if I were you. But thank you all for joining. I appreciate all the questions, and I'll see you guys next week, hopefully.